Hello everyone, welcome to Market Hours India. In today's pre-market analysis, we will quickly understand how Indian markets closed last Friday, what global cues are indicating, what FII, DI and proprietary client data is showing, and finally what levels are important for today's Nifty movement. First, let us look at how Indian markets closed last Friday. Nifty closed at 23,643, losing around 46 points. Sensex lost around 160 points and closed near 75,237. Bank Nifty was weaker compared to Nifty and closed around 53,710, down by almost 418 points. So the market closed on a cautious note, and Bank Nifty weakness clearly showed that bulls did not have strong support from banking stocks. Now coming to global markets. US markets closed in negative, European markets also closed in negative, Asian markets are currently trading negative zone. So overall global market sentiment is weak. For confirmation, if we look at index futures, GIFT Nifty is also trading negatively near 23,537. US and Asian markets are also showing weakness. Another important point is crude and rupee. Brent crude is trading above $110 per barrel and rupee is around 95.7 against the US dollar. Both are not good signs for Indian markets because higher crude and weaker rupee can increase inflation pressure and import costs. So based on global cues, today's market mood is cautious to negative. Now coming to FIA and DI data. Interestingly, on 15th May, FIs were net buyers for around 1329 crore, while DIs were net sellers for around 1959 crore. But this FI buying does not yet show strong confidence in Indian equities because overall FIs are still net short in index futures and index options. However, one positive point is that FIs added around 9100 fresh long futures on 15th May. So we should not read the data as fully bearish, but still, the overall position remains cautious. Proprietary traders are net long in futures, but they are holding mildly bearish positions in options. Clients are strongly bullish overall. This means retail and client positioning is still on the bullish side, but we need price confirmation before trusting the bullish view. Now, coming to option chain data for the 19th May Nifty expiry. At the 23,700, both strike, call rating and put rating are strong. This shows that 23,700 is a very important battlefield for the day. Immediate support is visible around 23,500. If Nifty breaks below 23,500, weakness can increase. Below that, important downside levels are 23,400 and 23,200. On resistance side, 23,700 is immediate resistance. Above that, 23,800, 24,000 are major resistance zones. So option chain is showing a cautious setup with 23,500 as important support and 23,700 to 800 as important resistance. Now coming to chart structure, and the daily time frame, 23,800 is a major resistance zone and 23,250 is major support zone. Nifty recently tried to move above 23,800 but failed to sustain there. This shows that bulls are still struggling near higher levels. For intraday, we will see 15 minutes time frame. For intraday, 23,500 and 23,400 can act as immediate support zones. On the upside, 23,700, 23,800 will act as a resistance zones. If Nifty fails near these levels, selling pressure may come again. So my final view is, unless Nifty sustains above 23,800, it is better to avoid aggressive bullish view. So my final pre-market bias for today is cautious to bearish. Unless Nifty sustains above 23,800, it is better to avoid aggressive bullish views. As long as Nifty holds above 23,500, the market may try to recover. But if Nifty breaks below 23,500, weakness can increase. And the next downside levels can be 23,400 and 23,200. Below 23,800 remains cautious. Above 23,800, bullish recovery may start. Below 23,500, bearish pressure can increase. This is my pre-market analysis for today. Thank you for watching Market Hours India. Trade with proper risk management and always wait for confirmation before forming a strong view.